Good morning and welcome back to the Opportunistic Trader for East 11 Tuesday after the Monday yesterday, which was pretty amazing overall. I'm joined by Vince,
Good morning.
my partner. I needed your help yesterday. I again had a losing trade, so I think I'm 0 for 4 for the month. And literally, I drove into work this morning and there was a guy actually killed outside the building, hit by a car.
Whoa.
It was so it actually made me think that I'm not, even though I was beating myself up, I'm not that bad. But
It, it,
I
you
don't
mean
see a
you mean
light
the
at the
it
end
could
of
be
the
worse,
tunnel.
like could be dead concept?
Exactly. It's
It could be worse, like could be a
I'm
bank
putting
or
it
Goldman
I'm putting
Sachs.
it in perspective.
Right,
Um,
right, right.
you
Well,
know,
0 for 3, in a month.
four. Oh, I think
0
I'm
for
0 for
4 in a
4
month
for the month. I
is
think, but I will say the only saving grace, I think I was 0 for 6 or 0 for 7, 0 for
right.
6 last month, and we ended up turning it around and got hot. And we
Well,
ended up finishing pretty positive for the
you
month.
know,
But, but the problem with the market that I see is the counter trend trade midday is not been working. The direction, even listen, we waited 50, 60 handles to take a short off of a V bottom of a bottom that we hadn't seen, and we lost 14 or 15 handles, which in the scheme of the move of 90 handles back up or 80 handles back up doesn't seem like a lot, but it's still a losing trade and it's still disheartening.
well, can I
Yesterday, go ahead, Vince.
just a comment on an analogy, if you'd permit me. Um, Active traders and day traders, and I'm not telling you anything you don't know, but I think this is more for the audience. Using baseball as an analogy, the active traders are baseball players. You have to, like any athlete, you have to be able to get up every time you're knocked down because you get it's a law of large numbers. But the people that are 0 for 3 and get 25 more at bats, they're in cash at the end of the day every day, and they have another opportunity the next day. The owners of the baseball teams are the guys that are running funds in Long Apple and not allowed to sell it. Those guys are only 0 for 1, but they're down 20% for the year. So we all measure ourselves in short-term trading, especially when I was an option market maker, day to day, by my last trade or when I pitched baseball, by the last inning I threw. But the reality is, we have chances to come back. We're not going to be ghosts. And uh, we look at the micro because that's how we manage risk, and we're hard on ourselves because of that as active traders, all of us. And that enables us to build a longer term track record. I mean, look at you year to date. I mean, I want people to look at that and say, who's doing that right now? No one is. You have to be an active trader, and you have to understand how algos work and have reasons. I would add though that these last couple of days, especially this last couple of months, last month, might be difficult, Larry, for reasons that you've pointed out. Uh, 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 Although I don't think you've linked them, but if you look at all the potential negating and short-term factors, you can't really get a clear read on anything right now. You have end-of-year liquidation. You might have end-of-year buy allocations. You have people jockeying for things, and people are trading because they have to, not because they want to. And normal relationships that we like to look at, like the VIX and the Nasdaq versus the ES, might not be where they should be, and make it a lot harder to trade in this environment. I mean, what do you think?
No, I think you're right. And yesterday, the FANG was strong all day. That held the market in, and then that exploded. Uh, it was hard to really determine what's going on. Like I'm looking at this as we speak, and we're trading at 26.70. We were trading at 25.83 yesterday at 12 o'clock. I think maybe things got better. I don't know what got better, but maybe things got better, but 4% better on a market that's flat on the year. So we retraced all of the losses pre-opening the next day from being down 4% on the year. And it just, to me, it doesn't, listen, prices are prices. So whether it makes sense or not is irrelevant. The market is run, as you said before, it's completely 100% run by computers. And Leon Cooperman was crying the other day because the market was down ticking and he blamed it on computers. And you want to know the truth? Computers are what took us up for the last 7 years or 8 years. Without the computer,
Exactly.
we'd be nowhere. So this is
Exactly.
a human being is not buying S&P futures 100 points higher than it was at 12
Right.
o'clock yesterday.
And
But
he's no dummy. He's definitely out there with pom poms. Leon Cooperman's a really bright trader, and I've watched his fund over the years and his fundamental reasons for buying stocks and assets. So he's not a dummy out there just cheerleading. He's a smart guy who's being, in my opinion, sorry, Leon, this is my opinion and not the opinion of Opportunistic Trader, disingenuous. That's how I feel about it. He's
oh
not
no,
ignorant.
he's a crybaby. The market isn't rallying. Listen, he's 100% permeable. I
Please.
mean, he's always been bullish. Doesn't matter. In years that the market goes down, he doesn't fare well. But to blame the algorithm, he should be thanking that algorithm every minute of the day, because the only thing that could bring us back from the lows yesterday is an algorithm, not a person. Because once the market rallied from down 55 on the day to down 20, there's no human that would buy that. They'd be like, this is ridiculous. This is a huge move. But you're trading with computers that are not price sensitive. They don't care. 2670 is the same thing as them buying 2770 or 2570. It's irrelevant. They're just looking to make what they're looking to make. It doesn't really matter. That being said, this is a V bottom low. We broke all the lows. I do think there's a retest coming and a lower low. I just don't know if they're going to bring it in this year or early next year. I hope, like I've said before, I'm so happy that the market is up again, or flat to a little
Right.
bit up, because that's just what you want. I mean, it'll be year 10, longest running bull market in history. The underlying fundamentals are really not great. Washington is not great. It was interesting. I don't know if you read Ray Dalio's spiel yesterday, but basically it came out on the dead low tick of the market, and he basically said that be prepared, and if you're not prepared, you're going to get smoked to the downside. And he was pointing out the Paris stuff and just social unrest and a number of other things, which obviously aren't playing into the cards today as we trade up 27 handles, 28 handles, and 100 points from yesterday's low. There should be some good trading in here. The one outlier that I see is the volatility. It's come in 5% today, but it's still above 20.
Well,
It's almost,
that's part of what I was hinting at before. How the things that clicked for you in terms of yeah, you see a breakdown or a correlation and you trade it for a couple hours. Maybe those breakdown and correlations, there's a lot more noise in the market right now because of conflicting things. Volatility is high, so we should be short stocks, and then stocks rally and volatility does not come off like it should. So either we go shorter term, and I say we, I'm just using the royal we. Either we go shorter term in time frames, or we go even longer term. I'm not sure what the answer is for now, or maybe we just recognize that the market is not an easy market this month. I don't know.
well, it depends. I was speaking to someone yesterday, and they were saying to me, this is someone that invests, not trades, but he said no matter what happens, no matter what, he's never selling. No matter what. Doesn't matter if he's long Apple. Now Apple is 10 points higher than yesterday. But he said no matter where Apple goes, no matter what, he's not selling. Okay. And that to
Okay,
me is the scary thing, because it really is true
but did he give
out
a
there.
reason why? Did he have some
Because
sort
he
of an
knows it's going to
insight,
go
like
up.
there's more news
Because he
coming
knows
out?
it's going to go up. That's what he says. He knows it's going to go up.
Right.
No one's
There's
seen a
sort of
bear market. No one's seen negative. If you look at Bitcoin, there's a market that is trading at 3,200, down from 18,000 now, or 19,000. that market may trade an all-time high at some point in the future, but how could you hold down 85% on your portfolio? So the question is, yes, at 160, 170 in Apple, the guy's not selling. But at 130, 140, he's going to be forced to sell. So you're not going to see real selling or retail selling until you tank, you know, 10 to
Well,
20%. Now these stocks, like Apple yesterday was 20, when it traded down, there was 25% off the high. I don't know how people can hold down 25%, but they do. And it's
with, here,
leverage.
here's some actual real numbers, just to give you an idea, because I know you always tease me about being an agent for the Swiss National Bank, and I know that SMB has been a big buyer of Apple. Here's something for you. All right, if the Swiss National Bank has not sold any shares this quarter, their P&L on just Apple would be minus $1 billion for the quarter. Just Apple. Now that maybe that's nothing because they can print their own money, but that'll give you an idea of how big the big holders are. The Swiss National Bank, if they sold no shares in this quarter, because their prices that they bought at, I think, are public, under 162, their P&L on just Apple is minus $1 billion, and they have loads of other FANG positions, uh, uh, or FANG type positions. Uh,
Why do they have
the,
such big positions?
well,
And
that's
why
their
do they
FANG.
want to be in our market so bad?
Well, it when yields started to go, when the European bond yields went, basically Europe bailed itself out by buying its bonds, kind of like what we did, but Europe took its yields to negative, and so you get to a point where you're a treasury, your central bank buying your treasury's bonds at negative yields, and that's stupid. You can't do that. And so the Swiss National Bank, not a wealth fund, the actual central bank, and not the only central bank in Europe, is now buying US stocks. And they've been doing it for the last year. And that's why I bring it up. Swiss National Bank is one of the largest holders of Apple. And the other national banks, the other central banks, the other Feds in Europe, they don't disclose what they've bought, but Switzerland does. And when you look at a country that can no longer buy its own bonds because the yields are negative or close to it, and at the same time needs to keep printing money, okay, needs to keep printing money to stave off what they fear is deflation, they end up buying Apple. So and stocks like that. So your big holders are Apple are, as you say all the time, and correctly so, Berkshire, and the second is Swiss National Bank. And although I can't prove it, some traders, a couple friends of mine in Europe, have said that there is large selling coming out of Europe. They don't know that it's Swiss National Bank. They don't think Swiss National Bank will ever sell. I think it's part of a deal that they have that they shouldn't sell. But it
I
is
don't
possible
know.
that
I don't
Berkshire
know
could
anything
be
about the
selling.
Swiss National Bank. I don't even see, are they even
Well, I
on the
put a chart in
holders?
the chat to give you an idea.
But are
Uh,
they on the holders list? How do they appear on the holders list?
I think they follow the 13th day. You can look it up. Swiss National Bank uh, owns uh, a ton. I mean, they have holdings in stocks. Like they own gold stocks. They own. I know this is blowing your mind, but national banks or the Fed in countries are buying stocks now for their portfolios because their own bonds yields are too small and they are printing money. So they have. See, Apple is now 23% off of its October peaks. Uh, that's a loss of 265 billion, uh, or basically the GDP of Bangladesh. Trying to look. We're trying to look. The information is easily findable uh, on bank holdings of American stocks, but they're out there. They announce it all the time. I looked at it. I only started looking at it because uh, Switzerland started buying gold stocks, and I'm like, what the heck is that about? But apparently, they started buying a lot of Apple too. They've been doing it for about a year, and that's where the buying has been coming from. And I'm not just saying from there. I'm
Much
saying
longer than a year.
right. If it's right, exactly. I'm being modest or conservative, but the buying. One of the big buyers has been other countries buying our stocks uh, while our own domestic institutions have been getting out. So there's your underpinning. I don't know if they've sold. I don't know if they're like any other institution. They'd have to follow 13D. They've done that. They've disclosed. Uh, Looks like the Swiss National Bank unexpectedly did sell U.S. stocks in Q3, dumping over 1 million Apple shares. I'm not sure. That's just something that someone privately texted me. So they may have bought the top in Apple stock price and then started selling just ahead of the October rout. That could have been
It's
them
never
selling
the
after the
listen,
news in
it's never
October.
the top. Just never selling. It'll never be the top. They just
Right.
continue to rally. Since we got on the air, the S&P just ran another 10. It's now up $33 on the day, trading 100 points from yesterday's low pre-open today. So we've rallied 100 points, puts us basically unchanged on the year in the S&P after rallying 100 points, which is about 3.5% from yesterday's low. So the market still does what it does. It's become a lot more skittish. People are losing. I don't even know if anyone, I mean, obviously people sold yesterday. I think it was maybe some hedge funds or future CTA types. But overall, there's no public liquidating. No way. No public. So, we got to go so much lower than yesterday's low to get anyone to pay attention to the market. My boys next door at Raymond James, they outsource their money. They don't care where the market goes, and they're not selling. They told me that they follow Ralph Block, except Ralph Block is not alive. So he used to give them the sell signal, but he's dead. So I don't know who they're using right now, but they're not selling. So
The Lowe brothers are bullish, I think.
yeah.
The founders of the company that ended up being Lehman eventually, or
Yes.
being bought up by Lehman.
What was it? Loeb and Rhodes or something like
Yeah.
that. But anyway, I think the market's a short up here. We're gonna short the opening, see how that works, and I don't see much. I see the regular. All fangs are up between 1 and 2.5%. The DAX is the outperformer today, but it's been the underperformer. Still down about 14% on the year, up 2.5% today. Markets are crazy. If you were on the air and we were making the low, you would have thought we were going to go through the year low at 25.30, and you look up and we're 200 points from there, and there's not a lot of time left in the year. So I think the battle for the rest of the year in the 10 or 15 trading days we have left, which isn't really too much, is whether we're going to be up or down on the year, and that's really it. Overall, most funds are down pretty good. If you have any international exposure, you're down pretty good. And, if you're long Apple, you're flat on the year. I think it's up again. Amazon up 30, Netflix up 30, Facebook down 15. Overall, it's a mixed bag, and it'll be interesting to see how everyone finishes the year. But the market, it's just, it's wild. I call it wildly unchanged. Every day we're moving 40 handles, 50 handles. Today we've already had a 50 handle range on the day. Exactly. 49.75. Actually, 49 set, something like that. 49.75. And it's just crazy that the market can do that. 50 handles every day. I mean, it's great for us. It's great for traders. But overall, for investors, there's nothing in it. This is our time as traders to add alpha to the P&L and to have the ability to make money every day, whether the market goes up or down. So that's what we look at. Looking at the broad-based markets across the board, the bond was lower this morning. It turned and somehow is back to unchanged. Oil looks heavy, but is up 75 cents at 51.76. Gold, you discussed before, it's up and holding up nicely. The dollar is sort of a mixed bag, not doing much today, and the British pound is actually higher, which made no sense. but I guess it's a relief rally since they have no deal. But yesterday they were panicking; they had no deal. But we're at the 126 level. It'll be interesting to see if we break out of this range, get down into the low 120s. But I don't see much, and the Canadians back to 134. So overall, not a lot there. The emerging markets are still underwater. China being down 20% for the year, and the Nikkei actually has been acting really poorly. I think it's down about 5 for the year. It was unched for the year. So in this sell-off, it sold off 5% to our selling off pretty much 1%. And overall, all markets around the world look fairly weak relative to our markets. It looks like yesterday was the low in bank stocks for a while now. Goldman Sachs is 10 points off yesterday's low, a little more. And Citibank's a couple of bucks off yesterday's low, as well as Bank America and JP Morgan. So those, the banks for some reason have firmed in here. Still think there's some more downside there. Still think you're going to see a yield curve inversion across the board before the end of the year after the Fed raises rates in December. And it's funny, the Fed is going to raise rates and basically go to a complete neutral with no more raises for next year. But a month ago, before we had any volatility, they were looking for 2 to 3 rate hikes next year. So it's interesting that a 2% sell-off in U.S. equities brings the Fed to a halt. So, you have a lot of news out there. Obviously, China stuff. Trump's going to hold on to that as long as he can. Change of Congress in January. The House is going to flip. They're talking about Trump is afraid of being impeached. So I don't know what's going to go on next year, but it's not going to be pretty. It's not going to be pretty. But for now, the markets are safe. It's a safe haven to be long equities again. I don't know if you have any thoughts on any types of markets or anything going on out there that you'd like to add.
Watching the dollar, a softer dollar should be bullish for U.S. stocks, especially if the bond market rallies. I think you'll see algos come in and buy stocks on a stronger bond, weaker dollar this morning. Anybody who is watching dollar-denominated assets that are purchased by, say, China, pay close attention to the offshore yuan today, which is down, or I should say, stronger by 0.2%, which is a lot for a currency day to day that is pretty much locked. And gold is rallying because of that, and that hopefully I'm starting to see some big correlations with their currency during this trade war and other aspects. So if the yuan continues to strengthen against the dollar outside of the DX, because it's not in there, gold, Tracy could be right, in gold and the dollar could rally. So just keep your eyes on things like palladium as leading indicators for stock market rally, and the yuan as an indicator for Chinese trade issues. So if the yuan strengthens, that's a sign that there's a belief in trade resolution. And don't be surprised if stocks scream higher on something like that.
Okay. I look at the market, and I was saying to Mike yesterday, if we stayed where we were and we ended the year down 3 or 4%, which doesn't look like the case, but if we did, and you add the 21 it was up last year, it takes us to 17% in 2 years. You divide that by 2. Trump is running at a 9 or 10% or even less return going into the third year of the presidency and his third up year. How does he consider himself one of the best market presidents, one of the best economy presidents, and all of the stuff that he's saying, where if you look at, annualized returns over presidencies, which I want to do today, I don't even think he stacks up. I don't
The f-
even. I mean,
He
listen, no
was
one's
tied with
touching.
Obama after 700 days, and since then it has gone down considerably in terms of performance.
Oh, he's not
How
even.
does he think
He's not
that?
even
He
close.
has, he's got a cluster B personality disorder. You can all look that up. He's got a mental problem.
Well,
Uh,
I'm just
it,
saying though, like Reagan, he's nothing like Reagan's returns. I don't, I don't know. Clinton had very good returns during his 8 years. The bottom line is he's no different, and he's probably worse on a return basis than most. And who knows if he's going to get out of these 4 years even positive? Because if we have a 20% correction, he's negative. You'll be in year three, 3.5, and he'll be flat, the lower. And then what? The bottom
isn't
line
that
is,
yeah?
I mean, and he's
Isn't
gonna, you know, I just don't, I don't see where it's so bullish under him and how he's, other than the one thing I'll say, and I was reading about Bush 1 or 41, and he said, read my lips, no new taxes, and then he had to do, taxes to basically balance the budget, and admitted that he was wrong. The one thing that Trump does that's ingenious is he never admits that he did anything wrong, and he never admits anything is bad or his fault or his problem. And in a way, believe it or not, as sad as it is to say, that works. So that's what's working for him, is the perception of what people think. So he tells you the market's amazing, even though the market's not amazing, you're going to believe it rather than, come out and tell the truth.
right?
So, you know, he's doing this thing where he's not telling the truth, and he's making stuff up, which he is. And the problem is the market in general is up 10%. If you divide it by 2 years, it's up basically 10%. Now, listen, no one's scoffing at that return. That's a great return, but it's not Obama like. And I know everyone says, oh, well, Obama came in during a crash. And that is true, but he endured a lot. And then the market turned and rallied for 8 years of his presidency. So again, we're up on the year, we're flat on the year. We haven't had a down year in 10 years. And it's, it's going to be interesting to see how this year finishes out going into next year, and how the economy, which they're saying is slowing and could be in a recession. I mean, I don't know how they're saying that, but that's the mantra to get these guys to stop raising rates. So there's a lot of stuff up in the air coming into next year. We think it's going to be a great trading year next year. We're going to have $50 range. We've had a $50 range already today, and the day hasn't even started, which is amazing. The low of the day is 28 and a quarter, and the high of the day is 78. So that's $50 all day long. That's big. I would say last year we didn't have one day that we moved 50, or maybe 1 or 2 days. There was nothing there. So we were stuck at a 10 volatility. It was straight up. At least now we have some uncertainty. There's good trading, and the market is really good to trade. So that's what we see here. Market's up 31 right now, and we want to short it, but we're just going to wait to see how far they're going to take this thing, and then we'll try to put out a short. And other than that, I don't see much. I mean, FXI is still, broken. Everything seems broken other than U.S. equities.
How's the straddle looking?
Today is not an expiration, and the straddle. $40. $40 is low. So it's pricing in about $40, which is lower than it's been. And tomorrow, if we're here, it'll be probably $28. So
Could you have
straddle's
traded
not.
the gamma on that straddle last night?
Last night, Yeah, I mean, you could trade it
No,
if
I'm
you.
saying, if you're saying it's low by today's standards,
Well,
and let's assume you're right.
straddles are down anywhere from $4 to $20 or
I'm
fifteen
just saying the
dollars.
S&P is now a 24-hour market.
No,
Um,
I know,
um,
but the straddle is actually lower across the board. Come in because volatility has come in, so all
well,
straddles are a bit lower.
I'm not debating. I'm just talking purely as a gamma scalper.
But you wouldn't
I
be
mean,
making money. So
buying.
let's say you bought the whatever straddle, the 50 straddle, any straddle, they're down because the futures up $30 and the puts are down on the 50 straddle. The puts are down 14. Bulls are up. I mean,
I'm
15. So
just looking at it as a
yeah, I
the
mean,
thinly traded overnight markets are now not so thinly traded, and
oh, on the
there's more
options they are,
there's more time for the options to pay for
but
themselves.
the
I'm not saying
options are
that they
very
do pay for
thin.
themselves.
But the options are very thinly traded. So the
Yeah.
highest volume option that's traded is like 200 contracts on the puts. So you'd have to put that on the day before. Once the day starts trading, there's big volume. But
No, I
overnight,
agree with you.
there's no
That's what I'm
volume.
saying. Buy or sell, depending on how you play the side. But as a buyer, I would be a buyer the moment it comes online, and I'd have my gamma orders at break even at night. In fact, we'll be talking about that in the options class today. Break even and theta, and what. That's why I asked you about the straddle. The straddle is 40, not expiring today, and that's the what strike is that?
70 straddle. It's not even 40, 38, 7.
So 37. Okay, cool.
Yeah,
So the
so
break even
as
for
you
that
know,
is
on the break even, you take the price plus 30 and 37, and you're at '07 or down to,
well, that, yeah,
40.
we're going to start today as the break even is the extrinsic premium and the value of the straddle today. We
Right.
don't want to get into too much like longer term gamma scalping. Just one day, which is why I think it's a good place to start.
Yeah, for sure. For sure. And that's all I see. I don't really have a lot other than that. We went over the bank stocks are bid, the FANG stocks are bid, the S&P is up now 30. We think the market's a fade. The problem is, you have DAX up 2.7%, and even though it doesn't really mean much, they always look at something to buy. But think there could be some trading today. Trump, is coming out that he has news on something, which is who knows what it
Well,
is. So
he has his
everybody's,
very own page for me now on Twitter. Just to
yeah. Who's coming on today, Mike? Anybody?
We have a good schedule today. We got 9:30. We got Alan Hill of Treasury Consultancy giving us a Brexit update. FX. He's really in the know about everything Brexit. That'll be interesting. He'll talk about where the pound and implications, things like that. We'll have a few market updates around 10 o'clock, updated levels, things like that, with myself and Larry. And then 12 o'clock, Adam Collins of Movement Capital. Once again, the COT data typically comes out on Friday, but it's been delayed the past few weeks. Last week was due to the president's funeral, so typically it comes on Monday, but he's coming on today at 12 o'clock to break down market seasonality and COT data. Then 1 o'clock, back by popular demand, our options class with Tom McEntee and Vince Lancy. Really been getting great reviews on that. A lot of great education information. They're looking at risk-reward opportunities, going over education of the basics to more complicated strategies for options and answering questions. So that'll be 1 o'clock. Tom McEntee and Vince Lancy on that.
Sounds like a great schedule today. I'm looking forward to it, and we'll be in the chat, and hopefully we get some good trading today. The bias is to short the opening, but it seems quiet, eerily quiet out there. Things are not forcing out for an up 30-day. The bond is barely down 4 ticks. Currencies are
Did,
mixed, and the
did stocks
volatility.
turn higher? This is a Trump comment. Did stocks turn higher about 45 minutes ago? If you're looking at like a 15-minute chart or
And
whatever.
I think they might have had an extension. They've been higher all morning. They were up
Okay.
15.
Because the Trump comment was very productive conversations going on with China. Watch for some important announcements, which would make gold go higher on the back of a stronger yuan, which would weaken the dollar, which would make stocks go even higher. So there you have it. The question is, so this is a headline rally that's triggering algos. So when you
I
fade it is
guess. I
something you'll
mean,
see in the
haven't
chat.
they lost enough money listening to Trump already?
Yeah, well, it's first to know, last to go, I guess, or something like that, or
And they
last to
push it
know and
up, and
first to
they
go.
hope someone comes behind them and buys. So,
Yeah,
we'll see his big announcement, which isn't going to be big, and we'll see the deal that he's going to do, which isn't going to be a deal.
right. But this is
And
classic, buy the rumors, sell the news type stuff, which could play into the level that you want to sell. You know what I mean?
I mean, I think this is a good level in here, but again, you never know what they can do. So we're sitting tight for now, and we'll see. And since we're trading terribly, we want to make our next trade a high probability. We thought yesterday was a high probability. We had some money in the trade. We didn't take it. Turned into a fairly large losing trade for us. Again, we didn't get caught the way you could have gotten caught yesterday. We didn't sell down near the lows. We waited for a 50 handle reversal. But in this tape, unfortunately, 50 turns to 70, and it's all algos. So today we expect a market to open up and then potentially trade soft. But we're going to wait on fake headlines from Trump. But the things just don't look to me that bullish. I would think you would have the bonds, if this is a real rally after the kind of move the bonds had up, that you would have them selling off. So, I guess we got to wait for Gunlock to come out with his opinion and, go from there. Anyway, that's it for this morning. Market up 30. We'll be back after the opening. Vince, thanks for joining us as always, and we'll see everybody in the chat. We look for an exciting trading day today with some news out of Trump, and we'll see how the market handles that. Good luck, everyone.